Okay, guys, Veteran here, Independent Traders Guild, ITG for short. Hey, and it's Saturday, January 18th. Happy New Year to everyone. If I hadn't spoken to you ahead of time or we're new, stop by Twitter or Reddit and introduce yourself. I'm going to run through some shorter videos, PVI system. It's going to kind of be a group of videos, but we're going to get this first one out. And we're going to talk about the annual returns and just kind of the process behind it. The first is our yearly performance. And again, 2018 is when I kind of rolled over from SPY, SPX, monthly trades to weekly trades. And then 2021, after COVID, went full bore. Troubleshot it all the way from June through December, January of 2021, and just writing and trading weekly SPX options. And that way I'm taking a 5-day, 5 DTE trade, no more than, no weekend, over weekend risk. And these are the results. Had a 92% return in 21. Again, a negative year on the markets, was a positive year for PVI, the best. And the reason why is because premiums were elevated with an elevated risk, VIX and volatility. 2023, 94%. And then last year we closed out at 96.46. And right now we're starting off our first week. We generated 3,200 in profits. And again, the first week started technically December 30th. And the reason why is that was week 53 of last year. So you just got to roll it over. There's only 52 weeks in a year. So you got to pick and choose when you start and finish. But, and then last week we pinned on another 1,900. And then this was a pretty big week where we got a $3,800 worth of premium. Now, I'll walk through the process, but just quickly, the spreadsheet. Here it is by week. These are the dates of the week. These are our PVI ranges, and I'll post those on the screenshot of a chart, SPX chart. The open for the week, where SPX closed on the week, our long put and our short put. Now, these are 100 wide credit spreads. And the reason why is you want to sell wide and theta, and then if you're long, you want to buy tight. You want to buy tight spreads if you're trading debit spreads, and you want to sell wide credit spreads. This is the amount of credit we got. Over here, you see these asterisks, and the asterisk just means that we either held a back ratio, which means we had more longs than shorts, or we just waited and we just sold 0 DTE, which all three of these weeks we sold 0 DTE on Thursday or Friday on SPX because there was not enough call premium early in the week to put this trade on. And you can see we got pretty dang good premium. Total premium received is right here. The capital usage, your buying power. Be careful. Your portfolio and your buying power are not equal, not always equal. Many of you have a span margin, portfolio margin. Others have no margin at all, and they're in cash accounts. So just understand that we're typically, if you're trading 5 contracts, 100 wide credit spreads, you got $50,000 at risk every week. But it's not cumulative. It's each week. It's 50 grand. The return on capital, the ROC, that's basically return that we got, total premium we received, divided by what our risk was, the 50K. Whether or not we won or lost, the weekly P&L is different than total premium often, because if I close a contract early for, say, 10 cents, well, it'd be $50, right? 5 contracts at 10 cents. This would be $50 less than total premium received. And that's reflected in your total P&L. Year-to-date profit, year-to-date return. Again, we've already hit almost 9% in just the first 3 weeks of the year. So, what most people look at, a 10 to 12% return for the year is a good deal. We're going to probably hit that in January, right? And so that being said, and again, the returns are phenomenal. When I sold my hedge fund in 2012, I was doing this monthly, not weekly, but our portfolio returns, we were only about 86.8, 86.9. percent. But again, it was monthly, not weekly, so it's a little different. So I'm going to go back. Let's just review the last few years. I've highlighted, these are the breach weeks where we closed outside PVI. You'll see three closing breaches in, that should be red, 3 closing breaches in 2022. And we had 7 intra-week. This is a week where we breached PVI, but we closed back inside it. So 3 of 7. Note week 3, which we just closed. Week 11. Note those. Let's go to 2023. 3 breaches, 7 intra-week. 1, 2, 3, 4, 5, 6, 7 intra-weeks. Note week 10. Week 11 in 2022. Week 10 in 2023. Let's go to last year. We had an intra week in week 12 and 16, and then our only breach was Labor Day. Again, we know something now that we didn't used to know back in the early 2000s. Don't sell a lot of premium on short weeks. Shortened weeks are chaotic for the markets. It screws up algorithms because everything's based on a 5-day trading cycle, and we only have 4 days. 1 day's close. It creates voids and pockets, and often momentum just overruns it. So we had a 54-point breach last year on Labor Day. And again, intra-week, we had 1, 2, 3, 4 breaches intra-week. And we're starting off real strong, but just keep in mind, week 12 last year, week 10, 2023, week 3 and week 11 in 2022. So somewhere around here, week 10, 11, and 12, we're noticing a pattern where we typically breach. Well, what is that? That's quarterly MOPEX, aka triple witching, which used to be quad witching. We don't have single stock futures expiring anymore, so it's just triple witching. But that's the process, and that's something to be aware of as we roll into March. Now, here's PVI, and again, I'll explain this in another post or another video, but just real quick, these are the PVI levels. We generate them on Saturdays and Sundays. All the markets are closed worldwide, and so I'm able to go get good data, no negative data prints because a market's open or something. And here's our one breach from this last year. That's pretty much the process. You can see when we get real close, and all the intra weeks, you'll see the lines are pushing right up against our levels. I'll explain how we defend and all that other stuff in other videos. I just wanted to kind of roll this out. When we're marking these kind of returns, are you going to get the exact same returns? No, probably not. But man, if you're shooting for 100% return and you come up with 68%, you had a hell of a year. And so we're going to encourage people to join us. Yeah, our Discord's paid, but again, I don't know that many people are getting these types of returns. Certainly not the consistency that's here on their own. And so if you're struggling, again, we got a great community to provide. Again, video 1, PVI, Pure Value Index. That's all it is. It's just an acronym. But this is how you can earn a little bit of money every week, $1,500 to $2,500 per week if you've got $50K to put down. Do not do more than 10% of your portfolio when you first get started. Always smaller than you think you should, and take less than you think you should take. Don't be greedy and try and hold everything on the table for that last little bit. It's going to come to bite you. Earn while you learn. Earn while you learn. The markets over the course of years, your portfolio is going to grow astronomically. All right, guys. Video 1's done. I will see you guys on video 2.